We'll start with CJ from Strategy. Please make your way. Big hand, please. Adrian Morris from True North. And Ben Werkman from Swan. Please give them a big round of applause. Thank you.
Hello. Awesome. Thank you so much for that introduction. Great to be here. Just thank you again to Tim, Ed, and Adrian for organizing this event. It's amazing. Honored to be up on stage with Ben and Adrian. Just as a side note, your initial appearances on Quant Pros was very influential in my journey of hustling my way into strategy. So thank you for that, and thank you to Jeff and Ryan as well. So MNav and Bitcoin KPIs, I'll share a few quick comments, and then I guess we can go around. Perhaps I'll just start with what I think is the true measure of success for a Bitcoin Treasury company. Then what is MNav? When should MNav trade above 1x? What could be the reasons? And third, how could you actually think of a valuation framework for MNav and actually quantify and derive MNav? So the measure of success for a Bitcoin Treasury company, I think it's pretty obvious. It's outperformance relative to Bitcoin. But I think what's lost on few people is that it's outperformance over the long term. Many people look at the one-day price movement of Bitcoin, or 1 week, 1 month, 6 months, and come to a conclusion that the Bitcoin Treasury company is not generating 2x the performance of Bitcoin. But that's not what the stock is designed to do. A daily levered ETF would give you, 1.5x or 2x the performance of Bitcoin on a daily basis, but actually not track that over 1 year or 2 years or 3 years, because if the underlying Bitcoin is volatile, then there's some decay, and they actually don't generate the 2x outperformance. It's the opposite with Bitcoin Treasury companies, where you might not necessarily outperform in like a 1 week, 1 month, 6 month time frame, but over like a whole cycle, 3 years, 4 years, 5 years, you would see that 1.5x to 2x outperformance as long as the company and the management team execute correctly. So that's one comment. And then on MNav, perhaps you all know MNav is, at least at Strategy, we define it as the ratio of enterprise value to Bitcoin holdings. Enterprise value would be the sum of book value of debt, book value of preferred equity, and then the market value of common equity. And if this is above 1, then it's in the best interest of the company to issue additional equity and buy Bitcoin with it, capture that spread in the valuation, and increase the Bitcoin per share and generate what we call Bitcoin yield. And if you take an extreme scenario and you assume that a company has a 1x MNav, so there's no premium, it's valued at its Bitcoin holdings, and there is no debt on the balance sheet, there's no fixed income, no leverage, it's 100% equity funded, then you could argue that it just gets stuck over there at 1x. And it may not have the ability to do this common equity ATM, accretive dilution. But as soon as you introduce any leverage into that system, into the balance sheet, and the cost of that leverage is lower than the anticipated return in Bitcoin, then the Bitcoin assets will grow, the debt will accrete at a smaller rate than that, and then the equity would outperform the growth rate in Bitcoin. So the book value of equity would appreciate at a faster rate than the appreciation of Bitcoin assets. If you assume the cost of equity is Bitcoin, like Bitcoin is the hurdle rate, and it's appreciating faster than Bitcoin, then it should trade at a premium. And then if it does trade at a premium, you can go out, issue common equity, and kickstart that engine. But the basic premise for trading at a premium is having that intelligent leverage in the system and arbitraging that fiat cost with the Bitcoin sort of price potential. And then last, very quickly on just like how would you value a company, or how can you actually quantify MNav or come up with some framework? In our Q2 earnings call for Strategy, we came up with a new Bitcoin KPI called BTC Factor, which is something we've defined as the ratio of Bitcoin per share at the end of a 10-year time period to the starting Bitcoin per share. So how much does Bitcoin per share actually increase over 10 years? And you can come up with your own assumptions over here. It would be subjective, depending upon your view of Bitcoin, the price appreciation, and then how much leverage would a company take, what would be the cost of the leverage. And when you model this out and you come up with an answer of, let's say, 30% Bitcoin price appreciation, 8 to 10% cost of leverage, and 30% leverage each year, the math would somewhat spit out 2.5x to 3x Bitcoin factor. And the increase in Bitcoin per share is basically 2.5x to 3x over 10 years. And the reason I'm describing all this is because this BTC factor could be thought of as some floor for MNav today. Because if you say in the worst case scenario, if MNav today is 3x and compresses down to 1x, which is the worst case, it would still have been offset by a 3x increase in Bitcoin per share. And the performance of the stock would have tracked Bitcoin. If it doesn't compress all the way down to 1x, it would have actually outperformed Bitcoin. So I think coming up with long-term views on how much Bitcoin per share can increase by having assumptions on Bitcoin price and leverage, is what can sort of guide you towards what a fair MNav for a company may be. So, happy to dig into this a bit more, but I'll pass it off to Adrian.
Sure. Everyone hearing me okay? Good? Better? Awesome. So, I think that MNav is one of the most counterintuitive aspects of Bitcoin Treasury companies, and I say that for a few reasons. As CJ just laid out, you have the metrics. You have the metrics that can be essentially derived from MNav. You have new metrics that you can create, trying to create a framework for understanding MNav. But for me, the reason why I think it's counterintuitive is because I view MNav as a measure of market sentiment. Any kind of net asset value or valuation above what I like to say a framework of 1 is essentially anything on top of that represents market sentiment. It is a forward-looking assessment on the market, whether that is in the case of a Bitcoin Treasury company, that can be forward-looking expectations about Bitcoin yield, forward expectations about Bitcoin per share, Bitcoin gain, what have you. That premium the market is paying, that volatility that the equity sees is representative of market sentiment. And I think that is something that people have a hard time assessing, because you could have a point-in-time view of what a floor for MNav is based on current performance. But projecting it into the future becomes, in my view, very difficult because it is strongly driven, if not entirely driven, by market sentiment. That is why the market is paying that premium. They are assuming that the stock will outperform, and they're willing to pay for that outperformance today for outperformance tomorrow. And a lot of the conversations that you see online, people are trying to treat MNav as a lever that can be manipulated up and down, but I don't think that's the case. I think what really will push MNav is corporate execution, the overall strategy, the amount of net asset value a company has. So in the case of strategy, they'll likely have the largest net asset value of any Bitcoin treasury company. All of those factors are what determines what premium the market is willing to pay today and what they will pay tomorrow. And however else strategy decides to leverage their balance sheet in the future. That can be through additional preferreds. That can be through additional offerings to the market that they haven't yet conceived of yet. I think that MNav is going to represent the market's view around Bitcoin. It's going to represent the market's view around the equity, and it's going to represent the market's view around how that particular company can leverage their Bitcoin in the future. If I had to distill it down to 3 primary factors, those would be the 3. And what we're going to see, I think, in the coming months and years is MNav is going to waver up and down. It's going to go up and down based upon that market assessment, that market sentiment, that forward-looking projection of what the market thinks these Bitcoin treasury companies can do. But I also think that people perhaps need to focus less on what the MNav is today and understand that they're making, in my view, a directional bet on Bitcoin, and in some ways a directional bet on Bitcoin adoption and market psychology around these Bitcoin equities. If we are all correct that the number of Bitcoin equities are going to increase exponentially over the next however many years, it stands to reason that the multiples are going to expand as well when they become more accepted in the market. So as such, MNav to me represents market sentiment, and MNav to me represents just one of the aspects that I use to judge a company in the current day, but I don't use it to judge or make any investment decisions around it. I'm looking at execution, I'm looking at strategy, I'm looking at methodology, I'm looking at the framework that the particular Bitcoin treasury has. MNav for me is important, but it's not the driving factor in my investment decisions.
think that there's an acknowledgement that needs to be made that there's a separation that happens in metrics as a strategy starts to evolve. You've got the management metrics that you want the management team to focus on that's going to drive the value to the strategy. Those are things like Bitcoin yield, Bitcoin per share. You want them to take the actions that are going to build the foundation. When we start talking about things like MNav, I don't actually dislike the conversation around MNav. And the reason is I think it serves a purpose as an anchoring point. When you're trying to evaluate an entire new sector out there in the market, investors quickly have to try to adapt themselves to figure out, how do I find value within this sector? And I think that that's one of the natural ways when you've got a corporation who's got a strategy of accumulating Bitcoin over a long period of time, is that they want to look across that ecosystem and say, if I had a starting point I could anchor to, what does that look like? And where the market is settled is on the net asset value of the Bitcoin, effectively. From there, to your point, there's a lot of different factors that are going to play into whether you get MNav expansion or contraction. And that's also a function of these corporations outperforming Bitcoin and underperforming Bitcoin during periods due to the leverage that these corporations are taking on. And I think that one of the things that's become very difficult out there in the market is we've evolved a little bit with the entire Treasury phenomenon where Bitcoin investing has crossed over with equity investing. Bitcoin, the investors that were investing in Bitcoin always had long-term time horizons. But equity investors typically have much shorter time horizons. There's a lot of trading activity that's happening out there in the market, and there's a lot of people that either have time-bound positions or they're trying to time certain market events. And so there's a lot of different reasons for entry points into equities. So I think what you're seeing right now is the confluence of two different investing styles. Bitcoiners, we've preached forever, Bitcoin's going to outperform everything on a decades-long time frame. But what we're starting to do with all the new metrics that are entering the market is we're trying to find a way to prescribe valuations on short time frames. Right? There's been a lot of talk about things like days to cover and all these, and I think those actually serve a lot of utility in this market because the benefit of what we have, as we now have 190 companies with Bitcoin on the balance sheet, not all of them are running the active treasury strategy, is you now have the ability for people to segment their investments. They get to view these companies in different categories. So if you looked at traditional equities and you think about value plays, clearly there's only maybe one, you could argue two, that people would probably consider value plays in the Bitcoin treasury space. A lot of the other ones are just emerging, right? This year has been massive for Bitcoin treasury companies coming out to the market, and because of that, it leaves investors grappling with who has the competitive advantage? What is the long-term strategy going to be here that's going to build that Bitcoin per share? And I think that one of the things I saw that went to the side was I stopped seeing any discussions about the leverage. There's been this race to accumulate Bitcoin, but because of that, it's happened using primarily equity raising tools to get out of the gate and achieve scale, which is understandable. But what that starts to skip is the benefit of putting leverage on that balance sheet. If Bitcoin starts to run away from you today and you have no leverage applied to your balance sheet on that Bitcoin, you likely shouldn't outperform Bitcoin in any meaningful way. However, if you go out and you apply an intelligent amount of leverage, right? I'm not saying you need to go get reckless, and I do think that ultimately we'll see companies try to compete heavily on volatility with really high leverage. But if you put on a 20% or a 30% leverage ratio, depending on what type of credit instruments you're putting on your balance sheet or whatever it is you're issuing to raise Bitcoin, that's what's going to create your outperformance ultimately. It's managing that. And that leverage, you really need to be focused on having these management teams hyper-focused on accumulating Bitcoin, building the NAV on the balance sheet, which creates the capacity to go and put on that leverage, whether it's through digital credit instruments or convertible bonds or whatever that company chooses to do. They need to build that NAV to continue to expand that ability to issue those instruments to keep leverage on the balance sheet. So I think MNav is going to be a constantly evolving conversation. I'm not going to sit up here and say that I've cracked the code on MNav. I don't think anybody has. I think we're all still in this period where we're adjusting to a new type of corporate strategy. And because of that, we're going to have to find ways that we're going to differentiate amongst these different companies. And some are going to get greater premiums than others, depending on how confident the market feels in their capability to go out and raise, to keep leverage on, and to build that Bitcoin balance where they can take advantage of that compound annual growth rate of Bitcoin relative to what they're issuing.
So I was just over there sitting with Mason, and he looked really confused, and he turned to me and he just said, "When Lambo?"
I'm surprised Mason doesn't have 2 or 3 already, so you might have to ask him that question first.
Yeah.
Does anybody have a question? Anybody in the room? Anybody at all want to talk about this? Do we have anybody? There's 1, 2, 3. Nothing? Wow, we silenced him.
Earlier this year, there was a situation where a company, I won't name them, they put out MNav guidance, and then they seemed to walk it back a little bit or adjust it. What do you think about the way that companies should communicate about their own MNav with the market?
Who's that one for? Is it for either of us?
Should I go first?
Go for it. No,
Yeah.
go ahead.
So yeah, I also heard about this one company that put out some MNav guidance. My understanding was that, internally at Strategy, we've always had thresholds based on which we decide whether it's accretive for us to be selling equity and buying Bitcoin. And we've always stuck by those thresholds. We've changed them and adjusted them based on how the market evolves. And after a lot of internal deliberation for multiple quarters, we came to a conclusion that we should perhaps communicate that to the market. And it's in the best interest to put that narrative out, to also give a bit of a jolt to the stock and bring some more upside volatility into it, bring in more leverage into the options market, get more options traders into the stock, because there was perhaps some demotivation happening with the volatility falling and just the narrative that was building up. So that was the initial thought process. And then what we saw as a reaction to it was a divergence in what the perhaps retail trading community felt, which is perhaps the more powerful dominant voice on Twitter and X, and the larger investors, where perhaps the retail community was a bit happier. They got some sort of benchmarks they could tie themselves to and come up with trading strategies. But the larger investors, the equity investors, thought that we were perhaps limiting ourselves and boxing ourselves out of a very accretive, powerful engine, while the preferreds are still maturing and are in their maybe adoption phase. And that it made more sense to just have the optionality and just keep that engine going. And so, that's why we decided in 2 weeks or 3 weeks that we would perhaps tweak it, adjust it, and retain the flexibility, retain the optionality, and most importantly, act with agility. Like we pride ourselves in being a company, having a management team that understands the market very well, listens to investors very well, and then reacts quickly. So that was like the broad reason why this happened. And on communicating MNav thresholds, I don't know, I'll perhaps pass that over to Ben and Adrian as well to share their thoughts for other companies or strategy. Yeah.
So with regards to the MNav guidance, my view on it is, I'm going to try to give it in a quick 1 minute here. So back to my point about MNav being a representation of market sentiment, I think CJ just kind of hit on it. He saw a divergence. He saw the divergence in the market, right? You have the retail community that was happy. You have the larger holders that were unhappy. Those are the two very large players in the market, representing two very, very different views of what the MNav guidance represented and what it should represent. I think that kind of also to Ben's point that we're going to be seeing these trades evolve, because I think there still is a broad disconnect in the market. If you take a look at before earnings last quarter, a lot of people were calling for negative EPS when, quite frankly, strategy was not negative EPS. That says to me that a large segment of the market is still, unfortunately, discounting the Bitcoin business. Now, that isn't a negative. That's just my perception of it. So with regards to MNav being representative of market sentiment, from my view, I think it'll be very difficult for a company to issue set guidance on MNav thresholds. I understand having them internally, but I think that doing it again will require perhaps a more flexible approach, and that allows them to adjust to the market just like strategy just had to. You cannot say, in my view, again, that the guidance is going to be here but the market must take you above that in order to issue, and you can't, if you are below that for any particular period of time, you are kind of boxing yourself in somewhat. So I think that it's going to require a lot of adaptability and a lot of flexibility with regards to how companies handle MNav guidance going forward.
Yeah, I think you have to be ready for the market cycle you don't predict. And if you start to take away the tools you have to operate in conditions you may not have had to operate in before, I think you're doing yourself and potentially even your shareholders a disservice if you get pinned by your own guidance. And while I understand the desire for that level of granular transparency, I also think that when you put that type of guidance out and you make it really concrete, you're giving potentially institutional investors a way to directly trade your stock. If they know exactly how you're going to act at a specific threshold, they've got the capability to take advantage of that and potentially manipulate it around there. And I don't know that you necessarily want that. I think you want some of that volatility to be out there because they don't know exactly what you're going to do at that point in time. You may issue guidance saying this is what we intend to do, but we want to remain flexible so that we don't give up some of our most powerful tools in the event we find ourselves in a position in the market where we absolutely need to pull that lever.
Last question, 2 minutes. No, not a 2-minute question.
Gotcha. I appreciate your phrasing, application of responsible amount of leverage. My question is, instead of additional issuance and things along those lines, what role might you see for Bitcoin derivatives in terms of applying leverage, very easy to do, or risk mitigation, or income generation, easy to put on, easy to take off? Seems like a lighter lift and can be more dynamic and reactive based on changing conditions, sentiments, what the investor base wants, etc. Any comments there?
Are you speaking more around putting hedges on using derivatives as a corporation?
No, more so there's a multitude of strategies you can employ above and beyond sort of vanilla call writing to generate income, right? You can do spreads, replacement trades, sell your Bitcoin by forwards, maintain your delta to the market, and put that additional freed up cash to use in any number of ways, etc. Just seems like a lighter, faster move than, say, more M&A or instrument issuance.
I liked something that I heard Michael say at the Bitwise event not too long ago, which was, if I start operating in a way that the market isn't prepared for, I take an opportunity away from somebody else to participate in this ecosystem. I think when you're building one of these companies and you're building it out for scale, sometimes you do need to keep things very simple and understandable for the market. It's what allows people to build the ecosystem around you that ultimately drives a lot of that liquidity into your equity. So for instance, you go out and you look at all the ETFs that have launched, and you've got the MSTYs and the IMSTs and all these different funds that have launched. That brings huge benefits into any equity. And that's because they know how strategy is going to execute, right? They've told the market exactly what they're going to do, and they stick to that. I think if you start bringing in complexity, particularly trying to get the market to digest the usage of different derivatives and different derivative strategies, you're going to bring a significant amount of confusion out there, which might cause people to shy away from that. They want things they can understand, and if they're building towards a long-term thesis, they want to know that you have a singular focus that you're going to execute towards, and they're going to know exactly how you plan to do that. So I'm not saying someone won't do that. I think that there's going to be a huge amount of flavors of these treasury companies. Strategy's one, they were the leader. Our group, we've gotten the feedback before that we don't cover enough of the other companies, and part of that is because we're following the first mover. We're following the company that has innovated at the beginning, but that's not to say it's going to be the only way. I think there's a flavor of that strategy that a lot of investors would really like. And you're going to find that pocket of investors that may support you as you go down that path. If you're trying to reach the massive scale, I think you have to be really focused on what is actually going to build liquidity in your equity so that you can operate at a level that most other companies can't. Doesn't mean there won't be specialized companies that are going to do something different than them, though.
Thank you, gentlemen. And CJ, you need to get some of these shoes. I heard you can get them online.
Yeah, I'm going to paint them orange tomorrow,
Okay.
but they all ran out online.
Thank you, guys. Thank you very much.
Thank you.